Hello, everybody. Gbenga, Olatunji FCA here. Let us look at interim financial reporting under corporate reporting. The guidance IAS 34 has to give to us for reporting interimly. And looking at it, we are going to look at the scope of IAS 34 and the frequency of the interim financial statements. We are going to look at the forms and contents of interim financial statements. We are going to be looking at use of estimates, and unlike that of the annual financial statement, interim financial statements relies heavily on estimates. So what are the guidance IAS 34 has to give on using estimates on interim financial statements? We are going to look at the content of a listed organization using interim financial statements. We are going to examine also the period for which interim financial statements must be presented, and we are going to look at it with examples because it's an aspect of IAS 34 that could be tested in the exams when we are asked to actually prepare interim financial statements. What are the things that should not be found wanting in it? We are going to look at it. We are going to look at the content of listed companies' interim financial statements and the content of publicly owned organizations' interim financial statements. These two organizations sound alike, look almost the same, but they are actually different, because when we are talking about the content of listed organization or a listed organization could be limited liability organization which has its share outside or publicly. So some percentage of the organization's shares are owned by the public. But meanwhile, when we are talking about public company, we are talking about PLC, publicly owned organization, public limited owned organization rather. So we are going to pick them one after the other right away as we go into corporate reporting, looking at ISA 34 interim financial reporting. So when we're talking about the scope of IS 34, when we're talking about its scope, unlike IAS 1 on presentation of financial statements, it does not really specify about how many times we should release interim financial statements in a year. Unlike IAS 1 that gives the prescription of an annual presentation. IAS 34 only guides and gives the authority about the scope and frequency to the nations, the countries, and the regulators within the countries and industries to decide the frequency. So here comes in the Security Exchange Commission to decide, and another enabler is the stock exchange of the country to decide how frequent the listed organizations and other organizations that are regulated and affected by mandatory statutory or statutory law of financial standard of that organization, of that country, to release interim financial statement. It could be biannual, it could be quarterly, it could be either way they choose. IS 34 allows it, but it mentions that within the first 60 days after the decided time in which interim reports ordinarily should be presented, the organization should present it. So when we are talking about the scope and the frequency of interim financial statement being released to stakeholders, IAS 34 didn't specify, unlike IAS 1 on presentation, but gives the authority to the regulators of every country and the industry to decide how many times they want it to be given to them and presented to the stakeholders. So we move on to forms and content of financial interim financial statements. Forms and content of interim financial statements. Unlike the general purpose, or just like general purpose financial statements, it is expected that every content, and we are not going to dwell much on this, every content of a financial statement should be present in an interim financial statement. So they must be condensed. When we are talking about the statement of financial position, statement of profit or loss, or other comprehensive income, when we are talking about the statement of equity, changes in equity, statement of cash flow, and notes to the account. All these must be condensed to make a content of interim financial statement. The period now. The periods that must be shown on an interim financial statement. Here we are going to look at it critically and try to break down all this big English to simplistic, understandable format. Basically, 3 periods must be shown on an interim financial statement. We must show the period where the interim period we are reporting on. We must show the corresponding interim period we are reporting on, and we must show the annual cumulative account, the last cumulative account. Basically, those are the 3 summary of it all. This is the detail as you can see. Statement of financial position at the end of the current interim period must appear, and the comparative balance sheet, which we now call statement of financial position for the previous financial year, must show the interim and its comparative. Statement of profit or loss and other comprehensive income for the current interim period and its cumulative for the current financial year must show. Comparative statement of profit or loss and other comprehensive income for the comparable interim period last year must show, and the cumulative for the year must show. The statement of change and equity too, we must show the comparative statement for the comparable year to date period, and also the current interim one we are reporting. Also, cash flow statement, the cumulative for the current year to date with the comparative statement for the comparable year to date must show, and we must show that of the interim that we are actually reporting. So looking at it now, all the big English that we've been speaking basically can be summarized now. Let me show you so that you can see it boldly. I believe now it's well projected. So everything we've been saying could be summarized again now. Let's say, for example, for Hex PLC, we want to report the interim financial report quarterly, that is 3 months now, and we are reporting for the entity as at December 31st, which could be, of course, of any year. So the year end of XPLC actually is to 31st December of every year. Now, the statement that must be presented in the quarterly interim reports, now we are reporting for June. So if we are reporting for June, that will be second quarter interim financial statements. What and what must appear? Like I told us, the three things that must appear cumulatively. So we are reporting for second quarter. So we must ensure we show the comparative for last year, which is this. This is the interim we are reporting. This is the comparative we are reporting, and this is the annual account as per last year that we are showing. So these three must appear whether we are showing the statement of financial position, we are showing income statement, we are showing change of equity, we are working on our cash flow and the like. So this is the summary of everything we've been talking about that must show. So we move on now to the use of estimates, and considerably we can spend a bit of time so that we can understand this one too. So interim financial statement dwells heavily on estimates. Why? Simply because we are yet to finish or know everything about the year under review. So therefore, we have to estimate for items like pension. We have to make provisions on quarterly basis. Peradventure, we are reporting on quarterly basis. Inventories, stock counts, and the like. A lot of estimates must take place, and when we are estimating, care must be taken. Don't forget that there are standards and guides on estimates in the financial statement too. So we'll be talking about recognition and measurement in an entity. And one ultimate guide as per estimate that we can borrow from IAS 1 is that there must be consistency in the application of accounting policies, even for our estimates. Let's take, for example, depreciation. There must be consistency in whatsoever method we've chosen to use. Anything outside it will run conflict and foul of the accounting standard. So, use of estimates in the interim financial statement must comply with IAS 34 and also must be guided by IAS 1 on presentation of financial statements. Let us look at the content of listed companies' financial statements. And This is very important as we set out to work and we can find ourselves in especially regulated environments, and we must not be found wanting in the knowledge of heat. Security Exchange Commission or agency of every country regulates the aspect of the content of listed companies' interim financial statements. We are taking a look at HAS now, which could be quarterly report. So for HAS now, it's mandatorily the listed organizations must submit interim financial statement to the Stock Exchange and Security Exchange Commission on a quarterly basis. So what are the things that must be in it? The accounting policies and if there are any changes, fluctuations experienced which are not that normal but seasonal and cyclical in their business operation must be noted. By way of note, changes in estimates, if for any reason, they must let the exchange commission know. They must ensure in the interim financial statement any issuance, repurchase, or repayment of debt and equity security must be shown. Dividends, they must talk about it. Items of segment information about their business operation must be shown. Significant events after the end of the interim period that they initially reported must be discussed. Business combinations, if had taken place, long-term investments, litigation settlements, related party transaction that has taken place, correction of prior year adjustments that relates to the quarter, discontinuing operation if there are anything like that, acquisition and disposal of property, plant and equipment, they must let us know. Restructuring or reversal of restructuring, they must ensure if there are provisions they must make, and commitment to purchase property, plant and equipment, and to what extent is going to really affect the business operations must be known, because they are listed organization, they must not be found wanting in this. Content of public company interim financial statements. Let me listed organization on SEC now. I quickly go back because I want to make a statement. Everything that we have stated are in form of notes, because every other thing, content of a financial statement must be present in the interim financial statement being submitted to Security and Exchange Commission and Stock Exchange. So these are addition, and don't forget that we had earlier discussed it in this video, just to ensure that we're on the same page. That was why I went back to quickly reiterate that. So content of publicly owned organizations interim financial statements: half yearly, which may not be half yearly concerning your home country depending on where you're hearing me from. They must disclose unclaimed dividend. Audit committee must be mentioned, their composition and the like. Corporate governance issues must be addressed. This is in addition to the normal content of an interim financial statement that must be submitted. Any activity that are of note carried out on behalf of the organization by the internal auditor, company secretary, financial controller, MD, the board chairman, the chairman of board committee, and the like, must be disclosed because these are important to corporate governance. IAS 24 is what we'll be looking at next on disclosure on third party and related party disclosures. We had looked at the scope of IAS 31 and its frequency of internal financial statements, the expectation of IAS and its guidance, and the difference between IAS 1 and IAS 34 on the scope of interim financial statement or financial statement generally has been looked at. And basically we reiterate that while IAS 1 on presentation dictates that every organization should present a financial statement on an annual basis, IAS 34 on interim financial statements did not specify, even though it encouraged all the organization to ensure that they present and release interim financial statements not more than 60 days after the day that they're supposed to release it, but the day was not mentioned because IAS 34 grants the opportunity and the authority to the regulators and the nation to decide on the frequency and on the scope as per their own country and organization under their purview. We had looked at form and content of interim financial statements. We had discussed about use of estimates, which we agree on that interim financial statements will draw heavily on estimates. Reason being that the year is yet to come to an end. Content of a listed company interim financial statement have been looked at, and when we are discussing the estimates, we made mention and reference back to IAS 1 on presentation, and we discussed that three things are prominent and must be prominent, whether as content of interim financial statement or in the estimate thereof. We must ensure we release the comparative interim. We must ensure the current interim figures, and also the last cumulative, that is annual figure, must be released alongside with them. 3. The period for which contents of listed companies interim financial statements. We establish one fact that disclosure of governance or anything that surrounds governance must be disclosed among so many other things like the notes to the accounts and the breakdown of financial statements, talking about the statement of financial position, statement of profit or loss or other comprehensive income, statement of change in equity, the cash flow, notes to the accounts. All must be accompanied by everything about governance within the quarter, within the biannual reports or whatsoever interim financial statements period we've chosen. Also, content of public company interim financial statement has been looked at, and we make a difference known between listed company and public company, in which we said listed companies have some percentage of their shares being owned publicly or thrown to the public to own, but public-owned organizations are state-owned organizations.